We're live. I get it. All right.
Is that all right? If we're live?
Yeah.
Okay.
Yes. I reckon. I suppose. Why the fuck not?
Yeah.
I reckon. Yeah. Well,
Okay, here we go. Thank you,
Yeah.
Max. Thank you, Max and Stacy, for joining me on Magic Internet Money. I've been trying to get a conversation going with you guys for a long time since I last tried to sell you some shitcoins in Mexico.
Oh yeah, that was we won't mention the name of the coin, but did I talk you out of it, or did you actually buy some?
No, I bought some and they went to zero.
I tell you like 5 times, don't do it.
You did. You said it was a scam, and it was.
But you were like, but the guys are so nice.
Yeah, they were so convincing.
I was like, exactly. Nice guys are scammers.
You told me about like the gold mining scams that the Canadian stock market was all going on. I didn't know about any of that stuff.
Oh yeah. That's always been the story for many years. Canada, Canadian gold mining, penny stocks have always been notorious scams for many years.
I'm gonna go tweet this out. By the way, I have to make sure our people are watching this.
Oh, perfect.
See, I didn't know we were about to go live. I didn't realize this.
Let's get do it, baby. Yeah.
I'm so excited about this. Okay. Hold on. I don't mean to make any noise here because
that's okay.
All right, don't worry.
I'm like Gen X, so I don't really know how to do this like gracefully.
All right. Great.
Well, I wanted to have you guys on because I don't think I know anybody else that would be able to make sense and answer my questions about what I think is happening right now than you guys. Because every time I watch you guys talk about what happens in the capital markets, you seem to have like a deep understanding of all the fraud that's happening.
Right. That's right.
That's been our specialty since we first started making content together in 2003. That was those were the very first we started doing a podcast, which didn't have a name in 2003. There was no such thing even as RSS2. So there was no podcast. There was no name podcast. So we used to make some radio content that we would upload to the internet.
Right.
And it was all about Wall Street fraud.
Right. So, I was a stockbroker for 8 years. So, you learn everything about markets, including all the good things about markets. You learn all the bad things about markets. You learn the history of markets and the history of fraudulent behavior in markets and everything that happened. So, you become an expert. So I'm basically an expert in markets and also virtual markets because, the inventions that I have for digital currencies and things like that. But that's how we came to it.
So Max also invented the virtual specialist technology he's talking about there, which is like a market making technology and, market
for celebrity stocks or something, right?
Well, yeah, the Hollywood Stock Exchange. So for example, they in Congress right now, they're talking about, we need to recalibrate these markets because of what's happening with this Wall Street bets and with Gamestop. So that addresses the function of price discovery. This addresses the function of market makers. Like, how do you create a price based on supply and demand? And it gets very tricky when you're talking about derivatives like options because there's no underlying fundamental value. It's all based on the options pricing volatility formula, which is an abstract kind of concept of what something should be worth. And so I understand what they're saying there.
Well, let me ask you, Max, because for a layman, right, like option WAP pricing volatility index, that doesn't make any sense at all, right? You get it, but I completely kind of like have to start at fundamental principles. So let me ask you, like, I learned this from you actually. I didn't do any kind of stock trading or anything when I first got into investing. I was thinking like, okay, 2010, we're 2 years into the 2008 collapse, and they're bailing out all the hedge funds and they're bailing out all the banks and prime brokers and all that stuff at the expense of the taxpayer. It's all propped up. So why the hell do I want stocks? I want gold. So I started learning about gold, and then I realized, hey, this was 2011. I saw digital gold. I saw Bitcoin being presented alongside gold and silver as an option to have digital gold. And I'm sure I must have seen videos of you guys as well talking about this. Trace Mayer, Roger Ver, like all the, like even Stefan Molyneux and all those guys back then, and Jeffrey Tucker and stuff. So thank you for influencing me to buy Bitcoin instead of silver and gold. It was a great decision.
Right. That's how we came to Bitcoin through both digital currencies that I've been involved with in the 90s. And we were covering extensively silver and gold at that time. And then Bitcoin came along in 2011. And so we just transitioned right into Bitcoin.
Okay. So I saw that it was like, okay, initially when I started, like I had some Bitcoin, I had some gold, I had some, I was building a house. I was kind of taking profits from my business and investing it, and a total noob at finance markets. I don't know what the hell it all is. I heard the concept of just futures, like you could trade cows and shit. Like that sounded just bizarre to me, that you could trade cocoa and like orange juice and all this shit. So I thought, what the hell is this? This is nonsense. I'm not going to pay any attention to any of that futures nonsense. I just want to buy Bitcoin and be an entrepreneur, and like I like gold. It makes sense to me. It has value. And then I learned about shorting, and that seemed like a scam to me. It seemed like why would you have a market that bets against things? Isn't investing all about in giving capital to companies so they can use it? And then you guys said on an episode a couple of years ago that in order to have efficient price discovery, you need to have a short side and a long side so that people can bet against excessive price rise, because then you wouldn't have a price discovery that's normal. So that changed my mind. I thought, okay, shorting's all right. And then I learned about naked shorting, and that seems to be like the scam. Naked shorting seems to be like the massive fraud that's been happening on Wall Street since the 90s. And this, you guys always talk about the global insurrection against banker occupation. This is Occupy Wall Street 2.0. Like we had Black Lives Matter riots all through 2020 because people were pissed off at systemic racism. We had the Capitol riots all through, like, you know, the election, and people getting pissed off because their side was pissed off. Now we've got the millennials and Gen Z who's digitally rioting. This is an attack on the capital markets. So I want to dive through, how are these guys able to naked short, and like, can you explain to the audience what naked shorting is?
Yeah, I can. Yeah, I sure can. I sure can.
Do it.
Right. So let's first establish what a short sale is, right? And as you point out, there's nothing bad or wrong about a short sale, because on the long side, you have people able to leverage their longs on margin, right? You put down $1 and you can buy $2 worth of stock. So you're using leverage. So if everyone is able to buy with a leverage position, you're going to have a lot of buy orders in there, and there's not going to be enough sell orders to have an effective price discovery. So
and prices would just run up, right?
You'd have a run up in prices, and it would be difficult to get good price discovery, because there would be an upward bias that would be hard to overcome. There's just not enough supply to overcome that. So when you have a short sale, it's always done in a margin account. You're always borrowing against, you're borrowing a stock. You're not borrowing cash, but you're borrowing stock, and you're immediately selling that borrowed stock at the market.
Who do you borrow from?
You borrow from the broker. So when you buy stock in a broker, it's typically held in what's called street name. It's not held in your name. And so all the stock that brokers buy, it's held in their inventory in the brokerage, and they make it available to short sellers who they lend it to at interest. So it's a way they can lend money at interest. They can lend stock at interest. People who borrow the stock from them at interest immediately sell that stock at the market. And that officially starts a short position, because they've just sold something that they borrowed. And that means eventually they're going to have to return the stock that they borrowed. So there's going to be two outcomes. If the price goes down, which is what they want it to do, and it comes to, and they want to close it out and return the stock that they borrowed, they have to go into the market and buy the stock that they sold. And they hopefully are doing that at a cheaper price than what they sold it at originally, because then when they return the stock back to the broker where they borrowed it from, the profit comes from the fact that it costs less to buy back that stock than what they sold it for originally. Okay, that's a short sale, and it's done in a margin account or a leveraged account. So this creates equanimity in the market. So you've got leveraged players selling stock that they're borrowing, and you've got leveraged players that are buying stock with borrowed money. And so they come together And, we have an event called price discovery, and the price reflects supply and demand and where the market is at that moment. And the official characterization that a specialist, the person that is making a market, they must comply with the order to maintain a fair and orderly market. That's what it says in the Securities Act of 33 and 34. You must maintain a fair and orderly market. So because the specialists, because they're in the middle of these transactions, there's a way to manipulate for themselves, right?
Right. So in the example, right, where someone's selling short, let's use GameStop as example because everybody's talking about it right now. So Robinhood traders, what is Robinhood in the scenario? Are they the broker?
Well, let me just jump ahead and explain what a naked short sale is.
That's right. That's right.
Okay, okay. So that I just explained a short sale, right?
Mm-hmm.
Okay, what's a naked short sale? A naked short sale means that a hedge fund in this case, instead of borrowing stock to sell it at the market, they simply counterfeit a sale order based on stock that doesn't exist. They never borrowed it. It doesn't exist. We know that in the case of GameStop, there was more stock sold short than exists in the company's entire outstanding number of shares. So that proves quite convincingly, we know it statistically to be true, that they were counterfeiting stock that they sold in the market that didn't exist with the express purpose of driving the price discovery mechanism to give that a downtick. They're manipulating the price down using counterfeit shares that they're selling for this express purpose of driving the stock price down. The ultimate goal of a naked short seller is to drive the price down to zero. The company goes out of business and they never have to buy it back. They just book a huge profit. It's just all profit. They never have to buy anything back. That's a naked short sale. It's illegal, but nobody enforces it. What law is there that's supposed to be on the books to enforce against naked short seller? It's called Reg Show, SHO. It expressly says you cannot sell stock naked, short sales. However, the only way to kind of enforce Reg Show is that at the end of the day, the broker has to reconcile every single order on their books to make sure that any of the short sales that took place, that there are corresponding shares in the inventory. But no brokerage house does it, and the regulators don't enforce it. So what happens is there are probably hundreds of stocks and thousands of securities. If you broaden that out to bonds, stocks, and derivatives, there are thousands of securities that have been sold naked short selling. We know this in the precious metals market, in gold and silver, that the manipulation of those prices, and this has been proven and documented over and over again, the prices are manipulated down by naked short sales. And they were caught. JP Morgan was caught doing naked short selling and spoofing, which is another illegal activity, to drive the price of precious metals down, and they had to pay a fine. So how much fine did they have to pay? They had to pay about 10% of the profits they made committing illegal activities as a fine.
Not bad.
Guess how they raised money to pay that fine? They raised the money to pay the fine by continuing to manipulate the price of gold. Right? So that's the market we're in.
The only better business than that is to be the Federal Reserve, so you can actually just print the money.
Yep.
Well, the margins are higher, actually. The margins are higher.
Okay, so for the lay person, right? Because I'm digging into this stuff lately, trying to figure it out. Because there's somebody in the crypto space, in the Bitcoin scene, that has been talking about this a lot over the years, that I kind of like peripherally follow. Patrick Byrne. And he talked about naked shorting and how he had like a crusade against Wall Street and fought with the SEC and like helped get these laws passed in like the mid 2000s or something to ban the naked shorting of market makers. Because they were
Patrick Byrne was a guest on our show. Yeah,
was he?
He's been a guest on our show
since before Bitcoin.
And the stock in question in that case was Overstock, and the naked shorts were driving it out of business. And he made a big stink about it. And he rallied the troops and really fought the regulators. And he pointed out this Reg Show, and he went to battle for it. But at the end of the day, there was no resolution. They simply, he ran out of patience. He got into Bitcoin. I talked to Patrick Byrne a lot about this. about how Bitcoin was a way to get out of the this Wall Street nightmare, because they couldn't do the same thing that they were doing
Right.
with Bitcoin. And he became a huge Bitcoin proponent. I introduced Patrick Byrne to Bitcoin.
Okay, so for people listening, like with this example of GameStop that's happening right now, so everybody knows that Wall Street is just getting bailed out by the central bank and by the Federal Reserve, and that it's not fair, and that usually the people that are suffering are the millennials and the Gen Zs that are going to have to pay back that tax bill in, you know, a couple decades. And all this trillions and trillions of dollars of debt that's being printed, the doubling of the money supply over the last 5 years or so, is all on the shoulders of the millennials and the Gen Zs. And what are we being sold? You're going to get a pension when you retire. We know that's a Ponzi scheme too, and then that's going to fall apart, and that there's not going to be pension money for us in 50 years when this thing is all blows up, because you can't just keep printing money forever. So Wall Street Bets was kind of like, and Davey Day Trader, whatever, Dave Portnoy, and all this like momentum has been built up on online by millennials and Gen Zs and stuff that are like, listen, we know the rules of the game aren't fair. We now know the rules they're playing by. They're too big to fail. We know that everything's going to get bailed out. So let's just have some fun. Let's make some money go up. We know stocks can only go up. So let's find the stocks that they're naked shorting and make them go up even faster so that they get blown out and we make a point. And that seems to be the activist investor that's on Wall Street Bets going on right now, looking for the opportunities to short squeeze Wall Street.
Right.
That's also, you know, going back to Patrick Byrne, he revealed all this information about the naked shorts on his company, but there was no community like Reddit to take advantage of it. So what the Reddit community, Wall Street Bets did is they identified through the options market that there was a massive short position on this company and of GameStop. And of course, a lot of these Redditors are gamers themselves, right? So this is part of their milieu as well. So they saw that there was a short position, a naked short position. So they use the options markets, they use the free markets and everything that's legal, they used it against them. That's amazing asymmetric warfare. That is how you take on these sort of illegal activities. So what they did is they bought really cheap call options, knowing that the market maker has to hedge himself by buying the underlying share. So they only spent a few pennies. The first guy, Deep Fucking Value, in the Reddit group, right, he bought $50,000 worth of call options. That forced the market maker to buy some shares, and it started the run up to drive the price up. All the gang were doing the same thing. So they were first forcing the options market maker to buy the underlying. Then they all started also using Robinhood, to buy. And remember, even when it was up at $400 and something, with Robinhood, you could buy $5 worth of the share. You don't need to buy a whole share. So you could have thousands and thousands and thousands of these day traders just spending $10. It was risk-free, essentially. All they were risking was $10.
Right. And we know there's been abuse in the options market from Apple Computer, Microsoft, Tesla. It's very common for corporations to abuse the options market in this way, for one thing. You remember when during the crash of 1987,
2001, the
LTCM,
the World Trade Center crash. We know that Steve Jobs, for example, repriced his executive stock options at the lower price, which is technically not really legal. For example, he was manipulating the options. We know that Microsoft sells naked puts all the time to manipulate markets vis-a-vis with their stock price right before they release earnings. They do it all the time. Tesla has been rampantly driving the stock price higher using options manipulation. And this guy in Japan, SoftBank, he's been engaged in a multi-billion-dollar options fraud to try to bail out his portfolio of stock positions that are all underwater, right? So these games are happening all the time. The fact that millennials and Gen Z were trying to get in on it it shouldn't be. They're just trying to fit in with what's going on ordinarily. The word fair, I don't like the word fair. Like, is it fair? Is it unfair? I don't like that word. I think the word is competitive. What the Gen Z, millennials, and Wall Street Bets and these folks, all they want to do is a chance to compete. They want a chance to compete. Let us into the ring and give us a chance to compete. That's all they want to do. And I think that's a laudable thing. They don't want the handouts. They don't want the free money from the government. They don't want to go to socialism. They don't want a cultural revolution like Maoist China. They don't want to wear little blue suits all day. They want to compete like red-blooded Americans. So I say, let them compete. And if the hedge funds blow up, they fucking should have been hedged.
Exactly.
Hedge. How come they weren't hedging their own hedge? Blow them up. If there's $20 billion to grab it. That's
okay,
what it is in America.
So this is where I think that I think there's something more going on here than just Melvin Capital blew up, because when I started to look into it, it started to feel a little bit like 2008 when there was a liquidity crisis and the toxic synthetic derivatives started to blow up, and that started to cascade through the system. This feels like we're on a precipice of another one of those situations. And like, okay, so with GameStop, Michael Burry, the guy from The Big Short that like found the whole system to be fraudulent in 2016 and 17, he put out a letter to his partners at Scion Capital in 2019 saying he's going long on GameStop, and he bought like 3 to 5% of the whole company, saying there's more shares being sold than exist. Something's not efficiently happening here. Wink, wink. This is fraud, and you guys, we're gonna buy this thing up. A bunch of Redditors saw this. It's also like the smartest like autistic boomer in the world saw this thing and like put a whole bunch of money, and he made like 200, 500, something crazy amount of money on this long position. So this was like the big long for him, fighting the naked shorters.
That's
and
right.
It's like what you said, like before with Occupy Wall Street, people were just standing outside of the buildings making a ruckus. Now they're actually in their bank accounts.
I want to also point out that back in 2008, you had no collectives like this. You had Occupy Wall Street, but they came out after the likes of John Paulson made $5 billion shorting the subprime market. He, of course, as a client of Goldman Sachs, knew that all the subprime mortgages were bogus. Like, he knew they were fraudulent. He shorted it, made a huge amount of money, but there were none of these, like, basically they naked shorted a crash in the economy at that time, and they got away with it. But they're not getting away with it this time. The Redditors and these people who it's over. They can't do that anymore, because now we all see it. And you see that with all the other stocks, like the most shorted stocks right now are soaring the most, because all the hedge funds, Steve Cohen, huge hedge fund manager, he's down 15% so far in January. He's leading the campaign to shut down these Robinhood app sort of things, and Cash App and Schwab from offering these trades to these little people who are ruining his free money deal.
Yeah, it's just guerrilla warfare. It's asymmetric warfare. The Robinhood people have the leverage in this situation, and the hedge funds are caught with these huge naked shorts, and they're going to suffer.
So, okay, so to go back into the naked shorting thing, this is what got me looking into this was, okay, so Melvin Capital was the hedge fund that was kind of like a darling or whatever hedge fund, and they were naked short. Well, they were just really short GameStop. And analysts like Michael Burry and like Wall Street bets folks figured out that GameStop was being naked shorted, most likely because there's a ton of undisclosed shorting that's not being covered. Mm-hmm. And that creates a short squeeze trigger at about whatever the price was. So they can see, based on like, using algorithms and stuff, how much shares are being sold that don't exist, and estimate, okay, well, this is their price where they have to cover their position. Otherwise, the game is over. Their pants are down. Like this is like the point where they are maximum leveraged, and we can just push it over that and liquidate them. So the thing is that's really fraudulent that I feel like is happening, that I want to get your take on. So Melvin Capital, they got caught with their pants down. Citadel bails out Melvin Capital. Citadel got bailed out in March by the Federal Reserve because Citadel was over leveraged. So an over leveraged fund, $30 billion hedge fund, gets bailed out from taxpayer money. The taxpayers fight back and go long on a stock. They're not shorting anything. They're going long on a stock. They're investing in the future of this company.
Yeah.
Wall Street says this isn't fair. So Citadel takes some of that free money that they got from the Federal Reserve, gives it to Melvin Capital. Wall Street bets says not enough, and they buy more, and they evaporate the whole $2.5 billion overnight.
That's part of the beauty of not only did they play the options market and know the weakness of the market maker having to buy the underlying, but they also know, like Citadel, it front runs all flow through Robinhood. So Citadel was one of the people short, essentially crushing their client, Melvin Capital, right? So Citadel gets all Robinhood orders first and then front runs those orders. So while the Robinhood, the Redditors from Wall Street Bets were buying on Robinhood, it was forcing Citadel's algorithm to also buy and crush their own company. So it was a virtuous circle. And speaking of the Fed, Max always points out that, of course, on Citadel's board is Ben Bernanke. So
No.
yes.
Oh my God! What an incestuous cesspool this is.
Yeah.
Okay, so Citadel, like all these Wall Street Bets, like average retail traders are using Robinhood now. Robinhood removes fees and says, "Hey, this is all for free. You guys can trade whatever you want." And then you become the product. They sell your trading data, your click feed data to Citadel.
Yep.
So then all the people are like the product, because now Citadel knows what people are clicking to buy, and they can just take a quick like high frequency trade ahead of you and make money on you. And then
they're also a prime broker to Melvin Capital.
Mm-hmm.
So they take real material risk. So
that's the thing. That's Citadel Securities, right?
Yeah. They're going to need another bailout. Now, could this be another kind of 2008 situation where the dominoes fall and we get into a global financial crisis? Absolutely. We have to, the thing that drives these global crises, it can be very small. The 1987 crash, I was working on Wall Street. It was just some contention between New York and Chicago. And before you knew it, you had the biggest crash in the history of Wall Street. The 2008 crisis was driven by the disclosure of one fund in Europe, not marking the market properly what those mortgages were worth in that fund. The dominoes fell. We had the global financial crisis. .com crisis. There was a report that came out that said bandwidth wasn't growing at 40% a year. Within 10 minutes, the entire souffle of .com blew up. I was working at a .com at that time. So here you have this potentially could be the trigger.
LTCM as well. It was like
LTCM,
just one that was
never in the history of the world has a sovereign ever defaulted. Okay, Russia defaulted. And then Greenspan bailed them out by lowering interest rates for the entire world. I mean, that's a nice friend to have. So here we have 2021. You've got Melvin Capital, Citadel caught fraudulently rigging markets, exposed by Wall Street Bets. And it's a domino effect, because then a Citadel could need a bailout. The Fed has to get involved. Oh, maybe the Fed is actually leveraged 70-1 already. So who's going to bail out the Fed? Oh, well, China, and they're having a war with China. China could say, hey, guess what, America? You know what? Fuck you. We're bought all this gold the last 20 years. We got, 5,000 tons of gold. You go fuck yourself, and we're buying Bitcoin. And then the US dollar collapses, all because of these greedy fucks on Wall Street like Ben Bernanke, Citadel, Melvin Capital, who just rape and pillage every second of every day. Let's put an end to it. Let's support Wall Street Bets right now.
Oh, I'm with you, man. That's like, I don't have any dog in this game or whatever. I don't have any puts or any longs or shorts or anything. I'm just seeing this as for what it is. Like, the people are standing up. This is Occupy Wall Street in cyberspace, and it's effective. It's actually working. It's the most effective riot or protest that can possibly happen. They've got 1 million more people join the subreddit in the last day.
We've been saying this for 20 years, that the way to push back against everything activists hate is using markets against themselves. We came up with Karma Bank, which was a way to harness monetized dissent. We came up with Crash JP Morgan Buy Silver, which was a way to put JP Morgan out of business. And we've been talking about this on Kaiser Report for 12 years now. And we got early into Bitcoin as a fuck you money back in 2011. And we've been saying this for 20 years. So yeah, is this the moment when finally we monetize dissent and put it back on the balance sheets of these corporations? And we have this huge, colossal collapse, which ends up making millennials and Gen Z rich? Let's do it.
Daryl Jones says the rich make the rules and they don't even follow them. And that's the entire point. Everybody knows that they're not following the rules. And now what did they do? They went and they stopped the market.
Yeah.
When it happens to them, that they've been screwing us for 10 years, ever since since the housing crisis. They've been screwing the public, and they just keep getting bailed out. They get Janet Yellen. Bruce Fenton told me the other day that Janet Yellen gets paid like $200,000 to go speak to hedge funds, and she does it like she's on like a tour.
By Citadel. Citadel paid her $810,000 last year for 2 speeches.
How is this not fraud? Okay, so Citadel, there's 2 Citadels. There's Citadel, and then there's the Citadel Securities, which is the largest market maker on Wall Street. And so for people to kind of understand, and maybe you can correct the way I'm understanding it, might not be properly how it works. So Melvin Capital's short a ton of stock of GameStop, and Melvin Capital gets a bailout from Citadel. Citadel Securities is the sister company that makes the market, that's actually providing a fraudulent market for these shares that don't exist. So they will bail out Melvin Capital, because if Melvin Capital fails, it's a domino that falls over to them and exposes that they're fraudulently providing a market with shares that don't exist. Because as part of the regulations that got passed in like 2008, the fair market making rules, when Patrick Byrne and these guys were trying to go on a crusade to get these laws passed and make fair markets, there's 2 things that you can't do. It's illegal to do. You can't sell shares that don't exist, and you can't, as a market maker, you can't make a claim that you have the shares if you don't have access.
Right. The reason they have Citadel Securities and Citadel is to get around that law, right? And there's no enforcement of those laws. As Eric Holder said under Barack Obama, the banks are too big to jail. It's called the Eric Holder Doctrine, where you cannot prosecute bankers because they're systemically important. Look, I work on Wall Street for many years. Every single day, the management comes around and says, "Do whatever you want. We got lawyers." Right?
Well, perfectly. Like in 2012, from when they passed those laws, so 2007 or 8 or whatever it was, until 2012. Goldman Sachs was still doing naked shorting, making an illegal fraudulent market. And then when they got caught, they said, "Oh, it was a computer glitch," and they got fined $15 million. They got fined $15 million for making a fraudulent market, allowing naked shorting to happen for 5 years.
Look, one of the reasons why millennials and Gen Z are broke is because of these broken markets that are broken because they are incredibly profitable for these bankers, and there's no good price discovery. Look, here's the thing. Like, I invented the virtual specialist technology for the Hollywood Stock Exchange. So let me explain something. People think that when you see a price quoted on the exchange, it's the result of buyers and sellers. They come together. If there's more buyers, the price goes up. If there's more sellers, the price goes down. That's not how prices are created on Wall Street. What happens is somebody on the trading desk at Goldman Sachs looks at a company like IBM or Microsoft, or they look at any number of these various securities, and they decide what price they want it to be at. So if they want the price to be 10% higher, they say, "I want that price to be 10% higher." Then they program their trading algorithms to get to that price. The price is just picked first. Then the trades are come in second.
And now the retail traders are throwing in that equation, is it?
What?
Are the retail traders throwing a wrench in that equation? Is that why they're shutting down?
A wrench in the equation, they are. But let me just finish this for a second. So with the virtual specialist technology, the way and now we sold it, by the way, to Cantor Fitzgerald, and Cantor Fitzgerald uses it to rig derivatives market. I can tell you right now, they're using my technology, and they license it out to other brokers. They make a lot of money licensing out my technology to other brokerages to rig markets. I invented it to stop rigging markets because I wanted the Hollywood Stock Exchange to be better than these other markets. It ended up in the hands of Cantor Fitzgerald, and they use it to rig markets. And the way it's done is that the parameters used to establish price discovery, all these different parameters are adjustable on the back end, and I can create prices under 1,500 different scenarios that are going to be in the interest of my portfolio, but it'll look completely legit, right? There's a way to, I can go into some depth here, but essentially the reason I'm bringing this up is to just make the point that there is no accurate price discovery whatsoever. Look at the high frequency trading scandals. So, like 15 years ago, these high frequency traders on Wall Street figured out that they put a server next to the New York Stock Exchange. Physically, they install it like on the sidewalk and they pipe into the exchange. They can capture data a split second ahead of everyone else, front run everybody else, and steal lots of money. And their defense is we're adding liquidity, which is false. They're subtracting liquidity. They're siphoning it out. If I go to your house and I put a hose into your car and I take the gas out and into a bucket and we're on our way, I'm not adding gas to your car. No, I'm stealing gas from your car, right? That high frequency trading is a massive fraud, for one thing. And every single aspect of these markets is constructed in a way that's completely fraudulent. So this is just the tip of the iceberg. This is just the beginning. Once you pull on this string, you're going to find some really, really atrocious behavior by every single banker on Wall Street, every single so-called regulator, every one politician who's involved in this. Every single one of them has their hands dirty. They're all getting fabulously rich by stealing money from out of the economy. And there's none left for people who they can't feed themselves. They can't afford health care. They can't afford housing. They can't afford to raise their families. Why is that? The money's been stolen. That's the bottom line, using fraudulent market making. And now the Reddit folks are saying, fuck you, we want our money back. So we got to applaud them and encourage them. They're on the right track. I feel like Deep Throat in the basement of, talking in the Watergate scandal. Like, follow the money. You're on the right track. You're doing the right thing. This is the way to kill them. And they are your enemy because they hate competition. They hate America. They hate you. You've got to put them out of business. You got to kill a hedge fund every single day. That's got to be the goal. Wipe them all out and take their money, because in America, we can compete. We're not going to stand by and let these freaking socialist-loving money-printing whores steal it all. No!
I feel like I need to do some push-ups.
Hey,
Stacy, you were going to say something.
I was going to say, because when he was pointing out that they find the price and they make that the price. So one of the biggest markets in the world, which is now the reference rate, which is now gone, is LIBOR. So remember that during the financial crisis of 2008 and afterward, literally hundreds of trillions of dollars of contracts around the world use the LIBOR rate as their reference rate for the.
What is LIBOR again?
It's the London Interbank Offer Rate. So it's supposed to be like the global interest rate on how much banks lend to each other. Like, what rate do they charge each other for the overnight rate?
That's the repo markets?
Yeah, it's related to that. So basically, it's telling you the health of the financial system, how much liquidity is in banks.
It's a global reference rate. So like a repo rate or a CD rate or a mortgage rate, it's always a reference to LIBOR. It's like LIBOR +1 or LIBOR -1. So basically, you had two things going on. You had the Bank of England, it emerged, told them to rig the LIBOR rate, to pretend that banks all trusted each other. And in fact, they were not charging 2% or whatever, overnight to lend. It was only a little tiny percent. Like they pretended it looked better than it was. But what emerged from all the data and the direct messages between the LIBOR, there's only like, I think it was 5 banks that used to set the LIBOR rate. They were DMing each other saying, hey, I've got a contract, this deal over here due. Can you set the LIBOR rate at this instead of what it's supposed to be? So they were just openly saying it. And he's like, done deal. And he's like, okay, cool. I owe you sushi next time I see you.
Did this come out through WikiLeaks or something?
No, it came out because of all of the collapses that happened during the financial crash. And with the LIBOR thing, I think it was actually a whistleblower that came forward and said, one of the banks, I think it might have been Barclays, somebody from there said, by the way, we were rigging LIBOR rates, but the Bank of England made us do it too. Yeah. So the Bank of England part got covered up. I think they did arrest some bankers, and I think they did some jail time in England for this. But I think that was a distraction from the Bank of England part of it. I think they just wanted to make sure that
right. So the global reference rate for all interest rate, totally rigged. Precious metals markets, totally rigged. This is documented and proven. All these hedge funds engaging in naked short selling, totally rigged. The stock market with the options market, totally rigged. currency markets, like Greece was allowed into the euro thanks to Goldman Sachs, totally rigging the market. Then when Greece collapsed, Goldman Sachs made $3 billion shorting Greece, totally rigged.
Yep.
Every single event, and it all goes through London, by the way. London is the epicenter of global fraud. So there's the AIG scandal, the Lehman Brothers scandal, the LIBOR scandal, it all goes through London. London is the epicenter of financial fraud because they have the loosest regulatory environment of any financial center in the world. And it's just a fraud on top of fraud on top of fraud. It's a layer cake of fraud. It's all fraud. And there's no true price discovery. And that's why people's lives are such shit, because they can't afford housing. They can't afford education. They can't afford healthcare because all the money's been stolen through fraud that Eric Holder thinks is systemically important, that the Bank of International Settlements with HBSC says is systemically important. HSBC got caught laundering money from Mexican drug cartels, resulting in 60,000 dead Mexicans who were beheaded. And their excuse was, well, we like to fucking buy yachts. Go eat shit. And that was allowed. And Eric Holder said, we love you, HSBC. We're never going to prosecute you because I'm a fucking crook too. So is Obama. So is Clinton. So is every other person in this administration. We love it, because it's a neo-feudal system, because they don't care if you're eating shit. And hopefully these hedge funds are going to be put out of business because a lot of money there. If you can crash these hedge funds, you can take back billions. And that's what these millennials and Gen Z got to do. And,
so with that though, because we are really, like, to me, like going back 10 minutes ago when you said that there was like little events that could happen that could crash the markets, it does feel like a prime broker could be taken down. If they do this like 2 or 3 more times, somebody's going down, and the whole entire, we saw in like the September 2019 when the repo rate spiked up to 8 to 10%. That's the true market rate. That's that's the real risk. That's the real measure of all the toxicity in the system. And you guys said on your show like a year ago that you thought what that represented, combined with like the spike in the increase of like Federal Reserve's assets and like the stuff on their balance sheet, that you felt like there was a global systemically important bank that was actually insolvent and they're just trying to cover it all up.
Yeah, absolutely.
Yeah, that repo scandal.
Yeah, the repo scandal. All right, the Deutsche Bank, I understand, was about to go completely bankrupt, which would have put the Eurozone into insolvency. It would have required a $50 trillion bailout. But they were able to push that under the rug in the usual way. Remember,
and by the way, I just want to jump in because it's not just, it's never just one bank. Because remember in 2008, they let Lehman Brothers go under, partly because of long-term capital management. Dick Fuld was the only banker who would not participate in the bailout of long-term capital management. So he was let go.
So they held a grudge for the next crisis to just let them fail.
They let Lehman go under, but look what happened. Total chaos. It almost took down AIG, which is a massive reinsurance company. So that's the thing, is if Deutsche Bank went under, who are all the counterparties to that? That was the thing that the U.S. was in particular protecting. And I'm sure it was JP Morgan, because JP Morgan's the biggest derivatives book in the world. So, it's going to be somebody like that.
Right. In 2008, under Tim Geithner, all the counterparty risk was made to magically disappear, because for a few months, they decided that all the phantom assets on all these balance sheets were good, and that they didn't have to make good on any of them in terms of risk.
So the phantom assets, like you're talking about, like the toxic mortgage derivatives, is that what you're talking about, or something else?
I'm talking about like credit default swaps and all the hedging and derivative products that banks carry. Then they do a calculation called value at risk, VAR. And they claim at the end of the day that their hedge risk is completely hedged in these derivative markets. And they carry a total derivative nominal value of over $2 quadrillion. And they say that there's nothing wrong, there's no risk in this $2 quadrillion with the derivatives. In 2008, there was liquidity crashed. You had a credit freeze, and suddenly they had to admit that in fact there was no $2 quadrillion in derivatives, because there's no market for that $2 quadrillion in derivatives, and all these banks are technically insolvent. So then Geithner and Hank Paulson and those guys got together and they rewrote the entire legislation and all the rules and regs for the banking system, and they held everybody hostage, and then they rolled out all the fake phantom securities once again. And essentially the way they solved the crisis was saying, okay, we caught you, you guys are all insolvent because you over leveraged yourself by 100 to 1. So here's our solution. We're going to let you now leverage yourself 1,000 to 1. Exactly the same thing, but do it 100 times bigger. So here we are in 2021, and we're having a repeat of 2008. It's just a repeat of 2008. There's now a credit freeze. If in fact Wall Street Bets and the Reddit chat board starts the 2008 crisis again by exposing complete liquidity, absence of liquidity in a major portion of these hedge funds, like a major hedge fund like Citadel. Yeah, we could have the part 2 of the 2008 crisis. And it was totally predictable.
Wow.
It was totally predictable.
So they've been trying to shove down our throats this shit sandwich about how this is not a banking crisis. We've got enough money to paper, like we've got enough money to make sure that you can take money out of the bank machines. Don't try to take your money out of the bank machines. We can print whatever. They've been trying to like really hammer down the point. Oh, the Federal Reserve doesn't contribute to the wealth inequality gap. The markets have to be more fair. That's capitalism's problem. That's not the Federal Reserve. They're trying to just like make sure that nobody looks behind the curtain at what's really going on. But it does seem like this is a banking crisis, and it seems like it's a
banking crisis. Look at Basel III, which is put out by the Bank of International Settlements. It's the standard by which banks are supposed to keep reserves. Currently, under that standard, the reserves on the books of banks, I haven't looked at this in a while, but it's something like 3%. So the banks only have to keep 3% of their loans on the books as tier 1 money, which includes treasury notes, and now they made it also gold. But we know that if you dig into the numbers, that you find that in fact the reserves on the bank for the major banks in the world are not 3%. They're negative 20%. They've got negative equity. That's what negative interest rates are all about. If they didn't have negative equity, they wouldn't have to float negative interest rates. Negative interest rates tell you that they've got negative equity. There's zero equity. There's less than zero equity. There is no equity on planet Earth in the banking system. It's all negative equity.
It's all dead.
And they get a fee. The more money you print, the bigger the fee you get. So that's an incentive to make the crisis worse. Because if you go to Wall Street and say, we got a crisis, we need to print $40 trillion worth of shit. And they're like, okay, great. We get the fee. We get 50 basis points on $40 trillion. Thank you very much. We just made our Christmas bonus. They're incentivized to fail because they get a fee on the Band-Aids. So the incentives are completely fucked up. That's what one of the major problems in the banking system is, that they're incentivized to fail and to commit fraud.
That's something that nobody's really talking about too much, especially not in mainstream news. But like the Basel III Accords were like the stress tests that the regulators were going to put on the banks to make sure that this was the systemic risk was solved and they had enough liquidity and reserves to cover all their debts and to cover all the normal expected outflows from 30 days worth of people's normal expected outflows. But what they did was they took this long ramp up to let the banks have 10 years to get ready for the reserve requirements. So it was like 3%, but the target was like 8 to 10%. And even that's disgusting that they can fractionally reserve that much and create more debt and fees and do fraudulent market making and stuff and still only have to have an 8 to 10% reserve.
Right.
But what happened was when March hit, when the Black Thursday hit, they canceled the entire thing. That was when it was supposed to ramp up to 100%. And when they were supposed to be ready for the stress test, they canceled everything. They passed in the CARES Act that they could have closed door meetings and bail out whoever they want that aren't subject to freedom of information requests. So the Federal Reserve was already through the repo markets, taking shit, toxic, high quality liquid assets that's like level 2B, not disclosing that maybe it's bankrupt bank stocks, like the equity in the bank that's probably bankrupt, and they're taking that for 50% value of base money, which then they can fractionally lend out now at 100% because there is no, they suspended all the reserve requirements. And to me, that seems like a crisis.
It is a crisis. And also you have to factor in rehypothecation and multiple accounting. So when they go to the bank and they say, well, we've got X security, it's a treasury note, it's worth X, Y, and Z. And by the way, we have another security over here. It's also worth X, Y, and Z. They fail to disclose that it's been a rehypothecated security. It's the exact same security. They're just counting it twice. Now in London, they have what's called infinite rehypothecation. You can lend the exact same bond an infinite number of times and put it on an infinite number of balance sheets and say it's got this exact same value. You got to say you got $1 million gilt. You can have it on 100 different companies' balance sheets, and they all claim it's worth $1 million. Right? The infinite rehypothecation. And in America, it's not infinite, but it is nevertheless.
It's like 115%.
Yeah, it leads to multiple fraud on the balance sheet. Or how about the Lehman Brothers during the Dick Fuld years? Every time the regulators every quarter to come in to see what his assets were, he played whack-a-mole.
Repo 105.
The Repo 105 scandal.
Via London. They committed, that's the way they do it. They all have offices in London and they commit the fraud through London. So it comes back into America. They do all the rehypothecation there. I want to say with the Robinhood situation, when they closed out all these accounts and liquidated accounts and stuff like that, I believe there could have been some sort of prime broker sort of situation happening there as well, because they work with JP Morgan. Their line of credit is with JP Morgan. And I think JP Morgan cut Robinhood off.
Yeah.
So I think Robinhood basically could have been insolvent as well. Who knows? Like, we'll maybe find out in discovery during this lawsuit in Manhattan. But
remember JP Morgan, they had the situation with that fund where they decided to crash everybody and be the primary creditor.
Oh yeah, with the one with John Corzine.
John Corzine.
Yeah. So John Corzine's MF Global.
Yeah, MF Global
out of Chicago.
Right.
He did the same thing, a Repo 105 sort of deal scam through London, where they kept on doubling down on European debt, I think Spanish debt in particular. Anyway, they borrowed client funds, which they're not supposed to do.
Dang.
And then JP Morgan saw it, and what they did is, because they owed JP Morgan money, but MF Global owed a lot of people money, JP Morgan just grabbed their money and took the bit that they owed to JP Morgan, and they were like that to all the clients.
And the clients got fucked.
Those custody funds,
yeah,
those custody funds are supposed to be like primary protected,
right?
But JP Morgan just grabbed it and said, like, you guys owe us money,
and ran. Total fraud, total larceny. The thing about the 105 repo scam, again, still goes on. So when the regulators come to check your balance sheet to see if you've got assets, they have one asset that they switch. Everyone uses the same asset between all the different firms.
That's what it seems like. There's the repo, the whole concept of the repo market seemed like they were just short-term gaming the Basel Accords so that they could just pretend that they had the liquidity.
Right. So when they do a stress test, the regulators come in, and the thing that they consider to be assets, they just pipe that in from a European bank like 5 minutes ago.
Right.
The regulators say, "Oh yeah, it looks like you've got a good ratio here." They leave, and then it gets sent over to another bank in Chicago. Right. There's only like one little asset that's being moved around and around and around. And of course, the regulators know this. It's not. They know it because they're paid to look the other way. Like, so there's no there. There's negative.
They would have to know it, because the fact that they so quickly just said no more, like, we're just going to open up the repo window and just provide unlimited money, hundreds of billions of dollars to whoever needs it without telling us who's getting it.
Yeah.
That basically, like,
I saw also that they're like looking into these Redditors. They want to see if they committed any crimes. And you're like, when we're talking about this MF Global story, that guy was John freaking Corzine, who used to be the head of Goldman Sachs, was a former governor of New Jersey, connected to the whole Clinton family. He knew he was breaking Dodd-Frank law, which was a brand new law, right? He, as CEO of MF Global, had to sign off on the books every night that they weren't using customer funds, allocated funds to gamble on the markets like they were. And so he should have done jail time. It was right there in a brand new law written right after the crash of 2008.
Right.
That was to separate, like retail or like regular American money from like gambling money, right? Like from what do they what can you just explain quickly what that is?
You're talking about.
The way the capital structure of a fund like that, there's everyone has claims of seniority based on how the cap table is structured. And in that case, JP Morgan was junior to a lot of other claimants, and they decided to just steal the money. Corzine, to allow that to happen, it avoided jail time. So Jamie Dimon basically put a gun to Corzine's head and said, "Give me my money and I'll keep you out of jail." So he didn't go to jail. The total mafia move. Corzine, the worst that came about Corzine was that there's stories in the New York Post about he's a lonely man in the Hamptons and nobody talks to him. right? So he was, oh my God, that's terrible. And by the way, he just started a new fund, a new multi-billion-dollar fund. So he's back in business.
It's like Wolf of Wall Street, except they just aren't getting caught.
Wolf of Wall Street is small time, peanuts. It's just nickels and dimes. I mean, I was on Wall Street during the 1980s, and I was living that life. And that is a small time operation. And all those stockbrokers and things like this, it's all nickel and diming compared to what Jamie Dimon, JP Morgan, Goldman Sachs, Deutsche Bank, and all these other banks are committing fraud. That is like they killed Greece. They destroyed Greece to make money on credit default swaps. They're destroying the Eurozone to make money on credit default swaps. America's being destroyed because a few bankers are making money with credit default swaps. America's under attack by it's a domestic terrorism on Wall Street. That's the domestic terrorism. Mm-hmm. You know, where's Washington on this? They're being paid. You know, all these politicians got their hand in the pocket. They're all getting rich while this wave of financial terrorism rips the country apart right now. Now, again, the Reddit traders and Wall Street Bets traders, that's like our only hope that can put some of this hedge funds out of business and to get some of that capital back into the hands of freedom-loving Americans who are all about, you know, patriotism and the American way. You know, we got to support this.
We need free markets again. That's the thing is, you know, when we talked about Greece, the fact is what happened with Greece is in a free market, you know, Greece went bust. They went bankrupt. And the likes of Goldman Sachs, John Paulson owned a lot of their debt. So what do you have to do? You, John Paulson, have to go and sit down with the prime minister and the treasury of Greece and say, hey, give us some money. Well, we're broke. We'll give you 50 cents back or 40 or 30 or 20 cents back. And that's what you'll get. So they negotiate like that. Nope, they didn't have to do that. What happened is the IMF, the ECB, and the European Commission, they came in and said, okay, the Greek people will give you 100 cents on the dollar back. And they forced the Greek people to pay everything back. You're seeing the same thing. The free markets, Greece would have got away with 20 cents on the dollar. Here, the same thing happened is who knows if these exchanges hadn't locked out all these, you know, Redditors, and 50% of Robinhood traders held GME. Mm-hmm. So they locked all those people out and forced them to sell for the benefit of one hedge fund. So, you know, who knows how high the price would have gone? It could have gone to 5,000. It could have gone to 10,000 for all we know. And it could have ripped apart the system, but that would have been the free market way. That was these guys were caught in a trade that they couldn't unwind. Yeah. And that shouldn't happen in a free and fair market.
But also it's probably, and this is a bit conspiratorial, but it's probably likely that they got the order from whoever's bailing them out and is aware that they're providing a fraudulent market. Citadel Securities doesn't have the stocks to close the position of all the naked shorts. So they actually have to close the lights off for like a day.
Yes.
Rig the paper, and then, oh, look, we found there's all the stocks are here. We sourced all the stocks, and we can close out Melvin Capital's position. Because if they don't have the stocks, if Reddit drives the price to $5,000, there's no way they can close their position, right? If the stocks don't exist.
Well, the company can sell stock in itself, right? You can sell stock, you know, and that's one way to close your position. So that's an option. In the case of Bitcoin, of course, that's never an option because there's never ever going to be any more than 21 million coins. That's why Bitcoin is the best way to do battle against these crooks. By owning Bitcoin, you're defunding Wall Street, defunding the central bank, defunding fiat money, because it's immutable and it's unconfiscatable and it's uncensorable. So hopefully these guys at Wall Street Bets and the Reddit folks will say, you know what, fuck you guys. We're just going to buy Bitcoin and ride that up to 500,000 or $1 million a coin. And we're just going to do it that way. You know, all the wealth transfer is going to happen via Bitcoin. We've been through this. We've been doing this for 20 years. There's no more efficient way to take capital back from these crooks than with Bitcoin.
Yeah, I would love to see the Wall Street Bets community adopt Bitcoin more as like one of the tools in their quiver, because, you know, it's nice to see the retail traders pulling the pants down of these fraudulent market makers and these over leveraged hedge funds doing naked shorting. It's awesome to see that. But on the flip side of that, a lot of people are going to get hurt because GameStop is not a scarce resource. They can issue more stock, and the people that didn't hedge with shorts and options and stuff are going to get wrecked when that thing drops, because it's going to drop. So the energy's great, but they need to like plug into your podcast and like listen to you and Stacy and like buy Bitcoin and learn about why Bitcoin is the real
Right. But I'll tell you now, I was watching the threads from Wall Street Bets, and here's what they said about Bitcoin. And I thought it was very revealing. They said that the reason we don't like Bitcoin is because the community is not focused. There's too many shitcoins. Every time we mention Bitcoin, you've got a swarm of shitcoiners trying to push all their shitcoins, and there's no focus. So the Wall Street Bets works because it's extremely focused on the most vulnerable stock at that moment to a massive short squeeze. And they can't diffuse their bets. They can't get into these shitcoin arguments. So the Bitcoin community has suffered by the presence of the shitcoins, the hard forks, and all the bullshit we've had to go through now for 11 years. It hasn't helped anybody.
Except for an Orange Pill Podcast Telegram group, by the way. If you come in there and you say, hey, what do you guys think about ETH? Bye. And like,
gone.
Because we've been around for a long time. And I do watch when Dave Portnoy or Joe Rogan say, hey, what about this Bitcoin? Look at the avalanche of shit thrown at them every single time. And I see how they get confused because they genuinely don't know about Bitcoin. So they've asked about Bitcoin. And then people are like, how about Link? How about ADA? How about this? How about that? How about this? Right. And they get so confused, they just get turned off.
So the Wall Street Bets are like, we don't have time for that drama.
But we in Orange Pill Podcast Telegram group kicked them out immediately. As soon, even I know, I'm sorry, but it might be an innocent newbie question, but I'm like, I can't have that.
Fuck that. So even Winklevoss got Dave Portnoy into some shit going.
Oh,
yeah, right? And then he dumped his Bitcoin because of that.
Right, and so he dumped his Bitcoin because he had a bad day, some volatility. He's like, I don't get it. And he dumped it. Right, so he's not the Winklevoss or not. What's wrong with these guys? I mean, they need to tighten it up, bud.
But that's the thing. The focus that Max is talking about with Wall Street Bets is like this is a war right now. It is the Great Reset happening. So we don't have time anymore like we did in 2011 or 12 or 13 or 14 in Bitcoin. This is like, it's over. This is the reset now. It's happening now. And all these conversations about how about this privacy coin, or how about this faster coin, more transactions per second. It's like, fuck that. We don't have time for that shit.
Nope.
We're going, like, Wall Street Bets went after the most vulnerable company because it was small cap and it was naked short. So that was the one they went after. They didn't debate about which one to go after and all the different companies with all the different positions. Nope. They went after that one. Same thing now. It's like, there's only one coin, and that's Bitcoin. And this should be the focus of the Bitcoin community.
The sooner Bitcoin gets to $1 million a coin, the sooner the millennials and Gen Z are going to have the wealth returned to them that was stolen from them. That's the bottom line.
Yes.
If you want to delay having your wealth restored to you, millennials and Gen Z, then fuck around with these shit coins. You're going to just suffer pain, unnecessary pain. If you just want to get your wealth back that was stolen, just buy Bitcoin.
Just buy Bitcoin.
Okay. And you will get your wealth back that the boomers stole from you. As a boomer myself, I can tell you, I can confirm your money was stolen from you. And if you buy Bitcoin, you can get it all back and then some. If you want to experience pain, like a lot of people, they like pain. They're masochists. They're like, I'm going to buy a shitcoin and watch it drop around and do nothing for a while because I'm a masochist.
You're describing Brad.
Right, even Brad. I saw you in Mexico. You're like, I'm a shitcoin masochist. I like to feel the pain, the burn of seeing a 99% drop.
I love to feel the pain.
There's got to be enough people in millennials that are not masochists, I hope. Unless you're all like,
I like to dabble with this stuff and try it out so that I'm educated to be able to critique it in a way. So if anybody is ever wanting an educated, like, experienced critique of DeFi and Ethereum and altcoin trading and all that stuff, I'm the guy that's done it all and I've tried it all and it's all garbage and nothing is like Bitcoin. And I talk about Bitcoin only, but I will defend Bitcoin and explain a good a good argument for why DeFi is just rebuilding everything that's broken on Wall Street on a blockchain with a terrible user experience and high fees, and why that doesn't matter for the world, and why it's actually a Trojan horse for tyranny, where Bitcoin is like a Trojan horse for freedom and human rights. So that's my mission, and I'm totally down with you guys. We need maximalists, and it's great to see like companies like Cash App and Jack Mallers with Strike, and you guys with your podcast. Like, you don't need to do this. It's obvious that you're passionate about this, and like, it's great to be inspired and see people that are Bitcoin only, that are pushing the message of why this really matters. It's not gains. It's not like a 10x or 20x. It's not like fast transactions. It's like replacing the entire money supply with something that people can then earn in a fair money. Like, you can whether you buy Bitcoin or not, if money is fair at the base layer, the proposition of like you earn and you store your value in money, it should be something that's fair. And we see with Melvin Capital getting bailed out by Citadel, who got bailed out by the Federal Reserve, who got rid of the Basel Accords and lets banks get hundreds of billions of dollars and dump their toxic shares onto the public balance sheet. We see that they're too big to fail. So it's awesome to just say, opting out, I'm going to Bitcoin. Bitcoin is more fair money. I'm opting out. And this is like why it's amazing to see Bitcoin is the attack on the capital, the attack on the capital in cyberspace.
Yeah, absolutely. Imagine you're a Robinhood trader. You figured out the GameStop vulnerability that this hedge fund was massively fraudulently over short, and you put some money in there. Now you're up 10x or 15x, and then the government apparatchiks show up, they shut down your account, and they steal your money.
Yeah, that's what they did.
That's what they did today.
That guy, deep fucking value, okay? He bought $50,000 worth of puts. It got up to something like 40 million. He's still holding, so it's crashed down because all these brokerages cut everybody off, so it crashed by 75%.
Right. First, they took your job.
Yes.
Right. They sent it to China. Then they took your dignity by, testing for COVID by sticking swabs up your butthole. That's coming to America. They're doing that in China now. People lined up against the wall and having a stick forced up their anus.
I saw that.
COVID, right? That's coming to America. So you got no dignity, no job, no money, no healthcare, no education. They've taken it all. They're stripping you bare. You're naked, poor, in the gutter. Is that what you want with your life, you fucking millennial dude? Hey, dude, wake the fuck up. Take it all back with Bitcoin.
The good thing about that, when I went to Schwab today, they do the top 10 searches on their website, and the top 5 were all those stocks that were halted today, like GME and NOK and stuff like that. The top 5 were those halted shares. Number 6 was Bitcoin.
Nice.
Not GBTC,
right.
Bitcoin. So that was pretty amazing to see.
Yeah, yeah.
The censorship literally led them to Bitcoin. You could see, if you see the image, it led them to Bitcoin.
It's unconfiscatable. The government at some point is going to come begging to millennials and Gen Z for a bailout because they'll have all the Bitcoin. Nancy Pelosi has any Bitcoin? No, she's too fucking stupid. She likes to play insider trading games and steal your money.
That's why boomers elected a guy who's a silent generation, right? Somebody who's 80 years old, cognitive decline. They feel like, hey, let's get a sweet old grandpa who doesn't even know where he is. We'll get him to go ask those kids to give us some Bitcoin.
Please,
please, you
kids.
can't say no to granddad.
I ain't gonna say no to grandpa, senile old Joe, who wants your Bitcoin because the government is broke.
It's just so ridiculous. Like it is just a big cesspool. Like Janet Yellen got paid $800,000, whatever it was you said, and like all these treasurers and people in government. Like if you watch the documentary Inside Job, everybody should go watch the documentary Inside Job and just see how like that was a documentary winning or an Academy Award winning documentary about the corruption and about this like circular like cesspool of Wall Street and government. And it's like, yeah, don't buy GameStop, buy Bitcoin, because Bitcoin is a scarce resource that fights with the same ethos that you guys on Wall Street Bets have to go against, expose the fraud. As a Bitcoiner, I kind of want to participate in what they're doing. I know I'm going to lose all my money, but I kind of want to help. It's like joining a protest or being an activist. I want to show the world that these guys are fraudulently market making, and then when the retail tries to get involved, they say, "Oh, that's not fair. It's not a fair market."
Exactly.
Yeah, I mean, look, if you have a base account of Bitcoin that's unconfiscatable, immutable wealth, then as long as that's your home account, your base account. So, okay, Wall Street Bets goes after some stock, and you're on Robinhood app, and you participate in this activist campaign, and you bag a few dollars, convert them immediately into your basic Bitcoin account. The Bitcoin account should be your basic account, and you try to add to it whatever way you can. Earn it, go to Fold app and spin the roulette wheel, and you win 20,000 sats or whatever. Barter for it, sell art for it, trade for it, but just keep adding to your Bitcoin over and over and over again. But the thing is that in this community, once you start talking about it in those terms, it's a slippery slope toward the shitcoin sphere, which is deadly because it's got so many problems and it's not even worth it. But the Wall Street Bet guys are definitely, I think, if they can get onto the Bitcoin, wavelength, and that spreads globally, because remember, Bitcoin is global. This whole Wall Street Bets thing is really domestic. It's the United States. People really can't buy stocks in the United States if you're outside of the United States, right? The U.S. is 5% of the world's population. So 95% of the world really can't buy U.S. stocks really conveniently. It's not really that convenient. But with Bitcoin, it's global. So if this global insurrection against banker occupation really takes on a global hue, and then you've got 2 or 3 billion people suddenly saying, we're not taking it anymore, we're just going to buy Bitcoin, and that's how you get to $500,000-$600,000 of Bitcoin. And so any millennial putting any money into Bitcoin right now at the current price, they're going to be retiring. Essentially, they're going to have their money. They're going to have their individual sovereignty
and
dignity will return.
I also want to add, all these millennials and Gen Z and the Redditors should go back and watch a film that was made in, I think, 2008 or 9 about Brooksley Born. And that really establishes the situation that we're in, what happened under Bill Clinton with Robert Rubin, Larry Summers, and Alan Greenspan. So they got rid of Glass-Steagall, as you mentioned, that separated the retail bank from the brokerage side, the speculative side. But they also, importantly, introduced the Commodities Futures Modernization Act. That allowed all of these derivatives. That allowed the credit default swaps to be sold to pension funds, to be traded around the world and grow into a quadrillions of dollar industry. One woman alone, she was the head of the CFTC at that time, she said, "We can't do this." She said, "This will blow up the global financial system if it happens." That is when Alan Greenspan and Larry Summers, Robert Rubin, and Bill Clinton stood up to her, surrounded her, and said, "No, we're going to do this." And Alan Greenspan argued that we should invite a little bit of fraud because it provides liquidity to the markets and the system. It makes it more efficient. So she predicted clearly that the global financial system would collapse because of these credit derivatives being traded.
So what was the movie? Do you remember the name of it?
It was like a short documentary made by a journalist. The woman who exposed Enron. Okay, she's pretty well known because she exposed Enron, and she mentioned Enron's black box. And remember, Ken Lay yelled at her on the phone, like during that conference call. Famously, this was a few days before they collapsed. He tried to get her fired, and Beth McLean or something. And then she did this article for Harper's, I think it was, and she did a little documentary about Brooksley Born, and it might have been, of course, British made for BBC or Channel 4, but I think you could probably find it on YouTube.
Yeah, I think if you just do a search for that woman's name in the film, you'll find it pretty easily.
Because
Brooksley Born.
Yeah.
Okay.
Yeah.
Is it The Warning?
Yes, the warning.
Okay.
She gave the warning. She
Yeah.
said this would all happen. The financial
Yeah.
collapse would happen. And
Totally. It's excellent. She lays it all out.
But the important thing is that Biden is bringing back to his administration all of those same people that said Pixley Bourne was dumb. She didn't know what she was talking about. All the Larry Summers and the Robert Rubin guys are all back in the Biden administration. So I think we have to watch out for this. And we have to keep on fighting. These Wall Street bets guys have to keep fighting, expose the fraud in the system, because once you expose it, it can't happen again. Like it becomes more difficult. And buy Bitcoin. Those are the two things they have to do.
Awesome. Well, listen, thank you very much for coming on. I know you guys are just going nuts with your knowledge. Everybody probably wants to hear about what you guys think of what's going on with Occupy Wall Street 2.0. So
it's
thanks
amazing.
very much.
We love it. GIALBO is global insurrection against banker occupation, and we love it. This has been something we've talked about, as Max said, for 18 years now.
Yeah, this is an amazing week. It's like all these things are coming together suddenly that we've been talking about for almost 20 years now.
Well, congratulations. You guys have been ringing the bell for a long time. So I hope you guys get the credit that you're due on both Bitcoin as a good investment and the shit that you've been trying to expose in the markets for 20 years.
Thanks, Brad.
Yeah, Brad.
And thanks for being Santa in the Orangeville Podcast Telegram group.
Oh yeah, thanks for giving away all those sats in the Orangeville Telegram group. That was very nice of you, Brad. Thank you.
No problem. I'm giving away sats right now. If anybody wants to check out my my pinned tweet, I'm shilling Strike. It's Jack Maller's app it's going to be open in 200 countries soon. And I don't have any equity in the company or anything like that. I just want to see Lightning Network prove all these shitcoins wrong, that you don't need cheap fees. You don't need to go buy in a shitcoin to get cheap transactions. Lightning Network is on Bitcoin with no shitcoin. It's BTC. Like Strike is proving all these blockchain companies wrong. Like Bitcoin can scale to the world. And so I'm shilling Strike so that everybody anywhere they are can go and register for Strike, so that when they launch it in 200 countries over the next 3 months or so, I'll send you $5 in Bitcoin.
Yeah,
Yay.
do it.
I'm going to send out the link to get the $5.
Yeah, me too.
I'll send you $5 in silver.
that's like a gram or two.
Super.
All right. Thanks a lot, guys.
All righty.